What's going on, guys? I want to make this a little bit of a training video here because there could be a potential trade idea, two-sided trade idea. So trade idea number one could be an active 20 play short. We are down testing trading below the 20 period moving average. If we do confirm, I will take a short position. Full transparency, this is a combine account with Topstep. So we're going to play a little bit more loose. We're going to play a little bit more aggressive. And we're going to try to get these things passed in as little time as possible. Again, I treat every evaluation combine as a $50 trade, right? So we're going to toss these trade ideas around and we're going to trade them as loose as possible. The second trade idea is a long. If we reclaim the 20-day moving average, I can actually use this candle's low wick as a stop. Okay, so I can use this candle's low wick as a stop and potentially ride a little bit of a dead cat bounce at this 20-day moving average. So again, two-sided trade idea because we could have a indicator to go short, but we can also maybe potentially bounce this, right? This could be a potential higher low. So if it is, I will show how that works and how I play that. Again, we're playing very loose and we are playing price action, and I'm using a lot of supply and demand levels to kind of show me that. So as soon as this next candle opens up, I'm going to show you how this looks, and I will kind of walk through this trade. So we got about less than a minute here. We're going to get that next 5-minute candle to print. And here it is. And I jumped that a little early on the short, but we're in the short here. Now it has confirmed. What I can do here is I can take this stop loss up above this 5-day moving average and above the previous 5-minute candle high, which is our reason why. It's about a $420 risk. We're going to try to target something as close to 1-to-1 as possible. Assuming that we continue to stay below this 20 play here, I might even actually look to add size, right? Which is also going to increase the risk. So for every contract traded, we're looking at about a $400 risk for a potential $400 winning trade. So we're up about 120. If it does start to stall, I'll just quickly exit the trade. I don't want to go down too much in this trade, like meaning I don't want to have no intentions of losing a full 420, right? I could definitely put the stop loss there at 300. I can put the stop loss at 210. I like just putting it over the reason why. That way it gives me room to wiggle and I can actually allow this trade to dance and move around a little bit. Again, if I see a very quick wick back up, I'll just kill the position because there's going to potentially be that idea that this is just a sweep and a bounce. So definitely just watching this position here again, because we might have that second trade idea. But as long as this is working, we want to continue to hold the trade. Again, we're up about 4 points max. So there's a 5-point take profit if anyone is looking for a 5-point take profit. Again, right now it's around 11:21 Pacific Standard Time. If you want to go back and reference this trade, depending on when you're watching it, we're up about 165, 145, 155. As long as this continues to drive, I will continue to hold. Up about $100, but I don't want to give a lot back. We're up about 185, 200, 240, 260, 285, and $300. I'm out. So that's how I play that trade like that, guys, on a 20 play. So I did fat finger into that a little quickly, and you guys are going to catch that on the video where we were working down. And again, I'm human. I'm not a perfect trader. Fingers slipped and I got in a tad early. It's okay. You don't need to have the most perfect entry, guys. Like, if the trade's going to work, it's going to work. And if it doesn't, well, then guess what, guys? You got to manage the position and you got to just get out of the trade if you don't feel comfortable, or you got to stick to your original stop loss. So just to kind of walk you through this trade, I went into this 20 play with the mentality of I'm going to put a Max Payne World War III, whole world's coming to an end loss over my reason why. The loss on one mini contract was around $400. I got this play to go into 150, into 200, into $300 profit, and boom, I'm going to sell. That's good enough for me, guys. I take enough of these trades, you're going to pass these evaluations pretty quickly. Probably going to get a great opportunity here to bounce this price action and use this wick as a stop. So like what that would look like again is if like you reclaim this 20 period moving average, this is going to be your max pain, and you can kind of drive this into like 525, maybe even 534. So you're kind of just painting in between these lines. But again, market's looking a little weak. The only reason why I say you could get a break is because you got 1, 2, 3, 4, 5 consecutive red candles. Again, you know, how much do I want to play this loose? Probably not that much, but let me show you what this looks like, right? Here's an idea where you can get into a long here. You can use this current 5-minute candle as a stop. It's a $560 max risk stop. We're already up $100, $140. We can just sell there. There's $100. So that's how I play these evaluations. Very simple, right? I look for 20 plays. I look for opening drive plays. I look for 30-minute opening ranges. I look for initial balance ranges. And then I play price action like this, where if I get a 20 play, I'll take the trade. If I get a reversal, I'll play some price action back up. And the whole thought process here is using that max pain down here, right? Using that max pain down here and seeing if you can get the drive on the back test into supply. So I hope this video helps kind of walk you through two separate trade ideas. We might have a third trade idea here where this hammer candle, if closes back over the 20 period moving average, is going to set up a 20 play. So for example, if we can take out the highs somewhere right here, we're going to do a stop buy here. Like if this takes this out, you might have a potential to kind of drive this 20 play into like 434. Okay. So we'll kind of see if this plays out. If it does, great. If it doesn't, that's also fine. All right, but let's just kind of see if this wants to play out. And I won't give it that long either. It'll just be a couple minutes. It'll be on this candle. If we can confirm this candle, we'll go ahead and hold it. Realistically, I'd like to see it stay above this little wick here to show me that the buyers are somewhat strong and decent. And again, I don't want to make this video too long. Today is the 19th of December. It's 11:26 Pacific Standard Time. If you look at what's going on in the price here, a 20 play like this is not really all that great of a setup because it's right at supply. Like it's at the 50, it's at a downwards power trend. It's not the strongest, right? Market is showing us definitely that it is losing a little bit of steam off of that low of day bounce. So this wouldn't be something that I would tell myself, hey, this is an A plus setup, right? This is just a setup. There's a difference between an A plus setup and just quote unquote a setup, right? So but because it's an evaluation, because it's a combine, we'll give it a shot, right? We'll give it a shot. We'll see if the trade wants to confirm. We'll see if it wants to work, and we'll just fire off real loose here, right? Whole thing is always protecting the downside, so understanding the risk, understanding that downside. Doesn't look like it really wants to confirm. We've got about two and a half minutes here, but we'll still give it the benefit of the doubt and see if the bulls do want to kind of get us going here. See if they want to reclaim this 20-day moving average. That way I could at least walk you guys through this trade too, because this is not the most ideal setup. So let's kind of walk through this one and see how it sets up. If it sets up, right? If it sets up. That's the big thing. If it sets up. I'm not really liking how weak it is. Just looks like more of a rejection. better idea was to probably allow that to get slammed at the 50 and then take it short. But again, I don't like to get into where I'm clicking buy, sell every 20 seconds, right? If you start clicking short here and long here and short here and long here, you tend to screw yourself up and go on tilt, right? Just kind of wait for your bigger ideas to play out and then fire from the hip. Because it's real easy for a trader to say, hey, this candle's red, let me get short. And what happens is you might make some cash on this trade, and then you do it again on another candle, and it doesn't work out for you. And then next thing you know, you're just on tilt, right? So you kind of want to have that level of discipline to where when you do take trades, you know, it's aligned with your strategy, right? It aligns with your system, your processes. Again, we got about less than a minute here before this candle closes. I don't really see much. Technically, it would be a 20 play short at this point in time. If it does stay below this 20, we'll kill it, and we'll see if we can get a little bit more continuation to the downside. Okay, so we kill that trade. We will look for the 20 play to the downside because there might be some room. There might be some room to drive to this prior wick. That would be my first intentions of taking profits. Or if it wants to absolutely flush, we've got room all the way down here to this Bollinger Band. Oops, I got the wrong order in. Sorry. Got the wrong order in. Oh, come on. Okay, we'll just manually get into the trade. I didn't have the right order set up. I wanted 2 contracts, so we're going to add a contract there. We're going to play it as such. We're up about $100 on this 20 play on 2 contracts, 80, 110, 100, 60, 90, 120. Okay, I'm going to scale one there. It's not really working as fast as I would like it to. 10, 30, 20, 15. I don't want to really let this spike on me too much. Down $50, $40, $50. I'm out. So again, if it doesn't work in a manner that I really want it to, we took about, you know, a cup of coffee on that. I will look for continuation through this low of wick here. Let's see if we can grab some of this downwards pressure here. We'll get in on 3 contracts there through that prior swing low. We're up 140, 30, 15. Again, it's all a scaling in and out process here. Trade ideas that we could definitely wash out to that Bollinger Band. We're up 195, 135, 60, 135. I will scale 1 contract there. And let's hold this and see if it wants to give us one last drive. $120. I'll take 1 more contract there. Last contract is up around $100. 40. I'll just take it off. It's not really moving as fast as I want. So all in all, on that last trade, because it was just kind of a scale in process, let's actually see what we made on that one. That last one, yeah, all in all, is about 130 bucks, 140 bucks. So not that much. But again, that's how loose that I'm playing these evaluations. Like when I'm sitting here and I'm playing these evaluations, it's 20 play here, it's a bounce play here, it's a continuation there. And then you're just kind of stacking up the day, right? You're just kind of stacking up the day. Again, the last trade idea was extremely loose. That's not as loose as I would like to play. What I'm looking at here is this wick though. Look at where this candle stopped. If we lose this wick, if we lose this, we could definitely come down a little bit more. Let's see if this trade idea wants to work. This is all just continuation. This is really not a strategy. This is not earth-shattering shit. This is just playing price action, and it's just catching continuation of the move that we're in. So I believe in supply and demand. When stocks lose a level of demand, they tend to gravitate towards the next level of demand. The next level of demand that we have is right here. So if we lose this level of demand, I'm going to expect this to come down into 460s, which is my next level of demand. I hope that makes sense. If this level of demand holds, great. Trade idea comes off the table and we look for something else. So let's see if we can get a flush through this demand. And the demand that I'm talking about is this wick right here. That's the lowest wick in this whole formation. You know, going back all the way a better half of an hour, this is the lowest price that was traded. So if we finally lose that, you could be looking at a washout into 60s. See if this wants to wash. Into the position here. We are playing aggressive size. Bounce backs, don't get scared. You're still under your supply zone here at the 5-day moving average. Although this number on the screen seems very, very scary, you have to let the trade idea work out. Okay, you have to let the trade idea work out. Again, if I didn't want this number on the screen to be so big, guess what? I don't trade this many contracts. Does that make sense, guys? Like if I wanted this number on the screen to be $100, maybe I'm trading micros. You know, maybe I'm trading one mini. I'm not putting on three. But because I'm looking for big moves and because I'm looking for not necessarily big moves in terms of points, but because I'm looking for a bigger dollar amount, because this is a combine, I'm going to put on more aggressive size. What's keeping me in the trade is we're still below this power trend. So if I'm below the power trend, the pressure is still down. The number on the screen can't scare me, right? Why would the number on the screen scare you if you're still technically valid on this trade? So if we start to go into the money here, I can definitely start scaling out of these contracts. See, we went from being down a lot to down a little. So let's see if this wants to continue and get this flush. So we can start scaling out of these contracts and call this combine a day. Let's see. We just need a little bit. Don't need a lot. Kind of dancing around here at this prior wick. There's a little bit of a flush. We're up $100. Not enough for 3 mini contracts by any stretch of the means. There's a $300 trade, $400 trade. We're going to scale one there, 240, 170. We're going to scale another one there. If this gives us one more push down, we are going to scale another one. What I'm actually going to do now is move my stop loss into profit $70. So this essentially becomes a risk-free trade at this point. I want to get my stop loss into profit. Once this trade starts working for me, as soon as possible, we're up $180 on one contract. Again, I don't want to give all the profits back. I will walk away with this trade, worst case scenario, on the runner with $70, and we've already taken about over $150, $200 on this entire trade. So this is definitely good. This can definitely be a $300 trade here. We're up 150 on one contract, 175, 190, $200 on one contract. We're just going to take it there. 170 is what I closed out that last one for. Guys, that was all in all about a $300 trade there. So I hope this gives you a good indication of how I'm playing price action. but more importantly, how I'm playing evaluations. Okay. I'm looking for my setups, 20 plays, breakouts, breakdowns, and I'm playing price action like this using these technical indicators as my gauges, right? When this went against me and I'm in drawdown, I'm not concerned. Why? The trade is still working. Okay. As long as we are under that power trend, the trade is still working. Hope that makes sense.